Good morning, everybody. Welcome to the Investing Bros. It is June 15th. It is Thursday.
We still got more coming, Tim.
Okay, here we go.
Retail sales month over month came in this morning. That was the big one. Was expected to be down 0.1% on consensus. Expected to be up 0.2% on forecast. Was actually up 0.3%. For those that don't understand what that means that demand is coming up a little bit. So kind of odd. We'll see, because supply and demand, that's inflation numbers. That's where that comes from. So retail sales coming up a little higher than expected. Nothing really big here today. But what we're looking at is the Michigan consumer sentiment, which will give the how people feel about buying things, right? Do they feel that the economy's weak, strong, so on and so forth? But it's not going to be next week. Next Thursday is Fed Chairman Jerome Powell's testimony. So I'll be curious to see what he says there. But the next big one is going to be, and I got to find it here. Here we go. PCE is going to be on June 30th. So we're going to close out the end of the month with options closing. That's going to be closing out at the same time that we have PCE coming out. I'm expecting June 30th to be pretty volatile. Trueflation down over 0.2% to 2.34%. U.S. Fed Gov, as of our newest rate, is at 4%. That's what we're seeing there. And then, guys, not as bad as I thought it would be. A couple weeks ago, I showed you this, and I showed you that we had $300 million in liquidations in a 24-hour period. We only, and I say only lightly, had 162.6 million in the last 24 hours. So not as bad as what we've seen previously on liquidation lines. Biggest one now, OKX. OKX running the biggest amount of liquidations in the past 24 hours. 84% of those being longs. So a lot of longs were liquidated. You see here, guys, normally Bitcoin's the big one. It's Ethereum. Ethereum's the one that got hit the hardest for $55.6 million in liquidated long, $60 million total, compared to Bitcoin's 46.42.
All right, here we go, guys. June is behind us. It was a pause. And we're going to talk more about what Jerome Powell said yesterday, briefly during headlines, because there's actually other stories that are even bigger. But right now, we're seeing a 71% prediction that we will get another rate hike here up to 525 to 550. Technically speaking, 28% are still saying we might see another pause. If you believe Jerome Powell, this is just the beginning. There's actually a prediction more than likely we'll get 2 more rate hikes, which is pretty ridiculous here. We'll have a pause in August. They're expecting a pause in September, another pause in November, and I believe at this point it is predicting we'll have another pause in December, but that would be ending the year at 525 to 550. I'll go ahead and just spoil it here. I mean, there's no point in holding off on it. We just got an update from Jerome Powell that now the Fed is thinking that they want to get rates to about 5.6, which means 550 to 575 would be the expectation here. CME Futures is calling cap at the moment. They're saying that Jerome Powell is full of it, but things can get updated very, very quickly on that one. We'll unpack more of those details a little bit later. We are now squarely in fear. I mean, still close to neutral, but sitting at 41, unless we see something change and we get a rally today popping us back over 25,200 and start making a push back up 26. I expect this fear and greed index to continue to go to the downside, and that actually could legitimately be a good thing long term. I want to start off by, there's a couple things we're going to be looking at here today. First of all, special shout out to Sharp Prime. You guys know we love them. Partner of the channel. Wouldn't be here without them. Phenomenal indicators coming that they've built already, that they're coming out more with, and these have just been absolutely lethal at helping us, even when we don't want them to be ringing the way they are. I mean, you guys can see this oscillator has been amazing. Now, the good news is we are getting some oversold signals flashing. The question is, will those be ignored due to bearish pressure, or will those hold up? We'll kind of break all of that down and more. The $25,200 level, of course, goes all the way back to August of 2022. It came into resistance back here in February this year when we were making a push. Was very briefly resistance again in March, but then we were able to break through it. My expectation was that we were going to hold, and you guys can see we actually were holding up pretty nicely. What ended up happening, though, is yesterday, with all of that information coming out, we did see it break through. And when you're looking on the daily chart, you're not going to see a whole lot of volume here, but it's when you start coming down here, 1 hour, 30 minutes. Let's go down even all the way to the 10-minute chart here. Look, this is exactly what I talked about, guys, before. I just didn't think it was going to happen. The volume that it took to break that level had to peak. I told you guys that in and of themselves, the bears had run out of steam. They needed some fresh power. And sure enough, look at that spike in volume comparatively to almost everything else we have seen for a while here. We got a massive spike in volume to push through that level, and this is not a good sign, guys. We are bouncing off of that red line, which technically it's forming a little bit of a falling wedge pattern, which is traditionally bullish. Gotta look on the positives. I keep those silver linings to the clouds available, but the fact that we're underneath this 25.2, do not be surprised, guys, to see us come up and retest it as resistance, which is also a very negative thing. As much as I have shifted now, I told you guys 25.2 was my level, and I have shifted. I'm in the middle right now. I'm not necessarily full-blown bearish. I still see us squarely setting up higher lows, so that's a bullish sign. I still think the bottom is in on Bitcoin. I still don't think we're coming down to a $15,000 Bitcoin price. However, do we match this bottom that we just had here a couple of months ago in March? Do we come back down and fill that CME gap? You guys can see we have the CME futures gap right here, all the way down here towards $20,000. I think there's a decent chance that that's exactly what ends up happening. There is a gap above us at 36,000. But I'm starting to think we're going to definitely have to be waiting for 2024 for that to happen, unless Bitcoin makes a little bit of a fake out move right here. That's kind of my last hope I'm looking at here. Cardano, especially the coins, guys, that were listed in that Binance lawsuit. Do we know that everything that they were accused of is stupid? Do we know that Cardano has never done anything that should make it as a security? Absolutely, we know that. That doesn't mean, though, that it's not going to be the narrative that the SEC pushes and that unfortunately a lot of people follow suit with. And things could get very ugly here, guys. If Bitcoin's going down, you know that altcoins are going to bleed. Not financial advice, but Piper's decision to get out of almost everything except for Bitcoin and Ethereum is not the dumbest idea in the world, because that's what a lot of people are going to be doing. At the moment, it did not come down here and touch its 21-cent price that we had just a couple of days ago here for Cardano. However, we are back down. We're kind of in the red here. Keep your eyes on what could be happening with this range. You're going to see a lot of bullish nature. This isn't going to happen immediately. I think almost everything can get a little short relief bounce, or at least kind of go sideways for a little bit, and then watch the RSI, the chart prime oscillator, the bands just start to move to the upside as they replenish themselves for a fresh move to the downside. I'm sitting here saying things should get pretty ugly.
So guys, taking a look at Ethereum over here, I'm actually looking at the 3-day, because where we are right now, I want to look at the bigger picture. Right now, this white line is the 200-day moving average. And Ethereum is literally sitting on its 200 moving average right now. Also, we did just break down below the 382 on the fib here, and we're hitting a trend assist. This trend assist is from the Chart Prime's Oracle, okay? What I'm seeing is we have this order block coming in right here at the golden pocket. Do I think that we're going to go down and catch that? If we did, fantastic, I'll buy some more, but I don't know that we got some good support right now on the 3-day. Where it comes into a little bit of a scary thought here is the oscillators, and you can see the money flow is still coming down, trend is coming down, but we're almost into that bullish zone on the oscillator pros. I think right now, bearish to bullish, I feel about 50-50 on Ethereum on a 3-day. But if we go over here, we pull up the daily, guys, we did lose our value area low here. That's this purple line right here running across. So we did lose that, came down, like again, there's the 200-day moving average. But if you take a look at this previous fixed range that we have here, which is where we're about to come and play, is this previous price action that we have here. You can see this dash red line right here. That is the point of control for that previous range. It's coinciding right where we are right now. So between this previous range point of control for all of the volume that took place there at buying and selling with the 200, I feel pretty good about where Ethereum is right now. We'll have to wait and see what happens with ETH there, but that's what I'm watching, guys.
Miles Deutscher, I think that's how it's pronounced, could be wrong, posted a very interesting picture this morning, and his reference here is, fun fact, stablecoin FUD often marks local bottoms. He went ahead, he just talked about the bottoms of this bear market, but of course he posted right here, Bitcoin Archive, hedge funds have targeted Tether. Lunar Crush, David Gokestein, I don't know. Last week, Tether FUD was the highest been in 6 months. Once again, Lunar Crush. So much conversation going on USDC DPEG this week. This was USDC. Shabacle, bam. Literally on the wick the day we came down to 19,000 or so, and then we shot back up. When we get this kind of FUD out here about stablecoins, that actually marks a bottom. Let's jump to a story here, even though we're going to bounce over on Twitter. What Jerome Powell said yesterday, I grabbed this story, even though the headline is just crypto prices plummet again. Here's why. Because I wanted to make sure you guys know the details of what happened yesterday. He paused the rates, and that should have been bullish, but it was his remarks afterwards. We told you this before, more important than what is decided by the Fed is what Jerome Powell says from the podium. And the thing that you need to know, why is crypto crashing today, is because of this. 12 of the 18 Fed members anticipate 2 more rate hikes this year. Suggested the medium terminal rate raised to 5.6 came in more hawkish than expected. Whew. This is rough. Then you come back over here to Twitter. Fed Chairman Jerome Powell says it could be a couple of years before interest rate cuts. So not only, guys, are we going to be seeing another rate hike, maybe 2 more, getting us up to 550 to 575. He's anticipating at this point that we could go up to 2 years without a rate cut. Prometheum is a very, very weird and strange thing that just came into play out of almost nowhere. Baby, the Prometheum story gets even better. So they started in 2017 when they filled their Reg A Plus and aimed to raise $50 million. But how did these random lawyers supposedly get approval from the SEC and FINRA? Look no further than their team, including Rosemary Finelli, who worked for the New York Stock Exchange and for FINRA. John Tornator, I don't know how you pronounce that one, CBOE, CO Joseph Zangri from the SEC. Around since 2017, this is the company, they did a Reg A Plus filing to issue a token in 2017. Have not launched their product since 2017, have a bunch of former SEC and FINRA staff, and suddenly appear at a hearing parroting political talking points favoring the SEC. This is their roadmap. They started back in 2017, just kind of filling you in case you get lost. We go, they have been around for a while, and they keep pulling out. They raise the money, and then they pull out, and they raise money, and they pull out, and they keep having these new grand launches that never seem to happen. But just now that it's convenient for the SEC to have a scapegoat to say, oh, look, somebody is doing this correctly, and this justifies our lawsuit against Binance and Coinbase and calling these other coins securities. They scrubbed their social media from prior to 2019, which is when they got their current domain on the .com. The previous .info site is still on Wayback Machine. On that site, they say their Genesis block would be in 2019. So again, it's just lies. Like, if you search by year through Google, you'll notice lots of noise about them in 2017 and 2018. Then nothing for a while until the end of 2020, early 2021, where they claimed to be SEC regulated and raised $15 million. This is one of their reports saying that that's what they did. That means that it got approval under Jay Clayton and not the current administration. It leaned on the commission statement of allowing broker-dealers to hold custody digital assets. But even to date, it acknowledges it can't clear or settle transactions. Therefore, even though it is registered, it cannot operate. This is from a Bloomberg piece on them. Then they go silent for a few years until suddenly in late 2021 to early 2022, they hire former FINRA and SEC staff, still with no clear product. After which they suddenly get the approval they wanted, still with no operation. So again, this kind of breaks down what's happening there. Now layer this all with the fact that they fundraise with the Wanaxing, I don't know how you pronounce that one, a purported CCP affiliate. They raised $48 million without a product, hired former SEC and FINRA people, pay $1.5 million to Network One Financial Securities. You remember that name, not just for today's show, but for a lot of stuff. Network One Financial, a sketchy company. But what we're kind of sitting on right here, in case you guys are kind of wondering, hey, where are we at the moment? I'm getting a little lost. They're raising over $50 million with no product whatsoever, meaning they don't work. This is nothing is happening here, and yet somebody is giving them $50 million to keep doing what they're doing. Who is Network One Financial? A shady broker with a Chinese affiliated firm with a horrible compliance track record of more than 20 regulatory or civil actions against them. It gets better. The broker that was one behind the iced tea company that pivoted to a blockchain project in 2017 as a scam, as well as another offering that was a blockchain pivot that the SEC charged for fraud. In 2022, again, mostly quiet until they announced they've launched their ATS. They claim that their ATS support digital asset securities, including Flow, Filecoin, The Graph, Compound, and CeeLo. Of course, since none of these are securities, they can't have. So they claim this ATS has existed for well over a year and that is integrated into Anchorage Digital Bank, but no one has heard of it, and it supposedly now is clearing regular crypto assets via an ATS. But the statement where they claim to be offering those tokens was in 2022. The Bloomberg article from earlier where they said they don't have an offering, can't clear and settle, and hope to list assets in the future was from May of 2023. So if they launched their ATS in 2022, why in 2023 are they talking about intent to launch and their hands being tied? Why are they suddenly showing up as congressional witnesses? Why are the tokens they listed in 2022, Filecoin, Flow, etc., many of these same tokens that the SEC has now first listed in their actions against Coinbase and Binance? There are three possible answers. One, These are plants who are being given a sweet regulatory deal in exchange for engaging in the way the SEC wanted to. Number two, these guys are using their SEC and FINRA connections to push an agenda to get certain assets deemed securities and for them to be the only approved player to capture the market. I'm thinking 1 and 2 are looking pretty likely here. Number three, these guys are grifters who raised a ton of money from sketchy sources and for years have been twisting worst in progress to continue to ride the grift. I don't know which one it is, but something is rotten here with all the efforts Coinbase, Kraken, and other reputable firms have put into putting their best foot forward. It is impossible to believe this sketchy agency got the green light. Even a cursory glance shows that this is not someone you should greenlight, especially not as the first in the space. Plants, patsies, and opportunists, it's unclear, but the fact that Gensler is letting them run around with the SEC approval is a red flag. He said it even gets better, so that the hearing that they're helping the SEC kind of prove, like, oh, there is a way to regulate the SEC correctly. They don't even know what they're talking about. They're literally passing notes during the entire hearing. This is a massive red flag. And again, my hypothesis, Piper, is this the new SBF and FTX to try to help the SEC gain control and get rid of all of these more actual crypto-friendly exchanges and crypto tokens that are decentralized?
Wow, you made it to the end of the video. Great job. Now, if you want more content like this, whether it be TA on Bitcoin and Ethereum or altcoins, or you just want to stay up to date on the latest and greatest news in crypto, then stay tuned and tune in to our 9 a.m. live show every single weekday morning. It's 9 a.m. Eastern Standard Time. And when you tune in live, use the keyword grip strength in the chat, and you'll get a special shout out from anyone who's paying attention to the chat. Love to see you there.